Mejor dia. So, Joe, here in ShapeShift, we have this wonderful lo-fi radio that provides bumper music for all our chats. I really like it. I hope you dig it too.
Yeah, definitely helps as a guest speaker to get in the Zen mode, calm down a bit, get rid of the butterflies.
For sure.
Welcome, everybody. Jim. We'll get started here in just a couple minutes. Make sure you go retweet and invite all your friends. See, we got Tex, Jim Tex.
Jim, guys.
Howdy, Tex.
Howdy, how you doing?
Good, man.
El mejor dia. Happy Friday, everybody. All right. You guys ready to kick this off?
Yeah, absolutely.
All right. Let's DAO it.
Let's
By the way,
DAO it.
Tex, there is a Zoom link in the stage chat if you want to share any screens. We're doing an AMA and intro today with Bond Protocol. Really excited for Foxes to meet the Bond Protocol team, learn all about their offering. We'll get a quick overview of bonds for anyone who's not familiar and learn about their new protocol, all the cool new features, as well as their roadmap and some of the really exciting features that will be coming soon. So we're going to give a lot of the stage today to Bond Protocol team so that they can present everything without interruption. But feel free to be posting questions in the stage chat throughout the call, or raise your hand if you want to come up on stage and ask a question. We'll make sure to save time at the end for all the community's questions today. But to start it off, I'm going to hand the mic over to Joe and Tex to give us a quick introduction for those of us who aren't familiar with Bond Protocol.
Thanks, Willie. So hey, everyone, really excited to be here today and talk about our growing partnership with ShapeShift, as well as Bond Protocol and how we work together. Introduce myself, my name is Joe, or of course, Big Fish Joe. I'm leading strategy, business development, and business operations here at Bond Protocol. I've worked with Tex the past year going on now. Previously, we were at Olympus DAO before spinning off Olympus Pro into its own entity, which is now Bond Protocol. Tex, you want to do a quick intro?
Yeah, thanks guys for having us. Tex here, previous biz dev lead at Olympus DAO, and then became product lead of Olympus Pro, and now product lead at Bond Protocol, the permissionless spinoff of Olympus Pro. And I know ShapeShift has used Olympus Pro quite extensively, and we're really excited to talk about some of the upgrades that we've made with the Bond Protocol platform versus Olympus Pro.
Thank you, guys. Welcome. One thing I want to emphasize here, kind of building on what Tex was saying, is we the DAO, have a pre-existing relationship with a lot of members from Bond Protocol. If you've been following along with tokenomics, we've been having the Olympus Pro bonds for several months here. They've been a very crucial part of our diversification strategy from Fox into stables. And I just got to say, it was always a pleasure dealing with these guys because, when you're dealing with DeFi, a lot of things can be ambiguous sometimes, or confusing, or time sensitive. And Tex and the rest of the Olympus team was always super responsive. So fast forward to now, and to see this new iteration of what Olympus was doing, which I think is a really cool evolution on that, and something that the DAO can use and actually is using already, is super cool. So really excited to let the community hear more about this as well.
Well said, Kent. And I think I'm looking around in the audience, I think most of us are probably pretty familiar with bonds and the concept of bonds at this point because of this long, great relationship we've had with Olympus Pro. But just in case, so we don't leave anyone behind, do you guys mind just giving a quick overview of what bonds are? And then we can dive into how Bond Protocol is evolving the V1 bonds that Olympus Pro introduced.
Yeah, absolutely. I think I'll take a step back and just talk about why bonds exist in the first place and the problems that we're trying to solve. So for those of you that are familiar with Olympus DAO and its bonding mechanism that it had created last year, as well as the wave, it was all about protocol owned liquidity and reducing the token inflation that Pool 2 and liquidity mining programs caused. So as protocols were acquiring their own liquidity, typically LP token trading pairs, they could reap a number of benefits. They could get trading fees, but the primary one is they wouldn't have to incentivize liquidity mining programs as much. So they're not bleeding as much tokens. They're not getting taken advantage of by mercenary capital as they acquire liquidity. But the other challenge that ShapeShift was prudent to identify a couple months back or even further was the importance of Treasury diversification for DeFi protocols. Most DeFi protocols, and this has become increasingly apparent during crypto winter, are overweight in their treasury from their native governance token. So if token goes down 60%, 70%, 80%, they're faced with a number of challenges. They have to continue to pay contributors in their native governance token. They have to decide if they have to deprioritize strategic growth initiatives. And it's a very difficult situation for them to get out of if they don't have a diverse treasury. So enter Olympus's bonding mechanism in order to provide solutions to these challenges. So we're labeling ourselves as the next evolution of bonds as a service. But effectively how it works is partners such as ShapeShift are able to create their own governance bond markets. And so within our DApp, if you go to app.bondprotocol.finance, what will happen is you will provide a principal asset. So for many protocols, that's the LP token pairs. For ShapeShift, it's LUSD bonds. So they're trying to diversify their treasury. So it's a dynamically priced discount based off of demand. And if you buy a bond, effectively what happens is that you are given Fox vested over a specific period of time. I believe it's 14 days for these bonds at that discount in exchange for the stable asset, which is LUSD, that ShapeShift wants to acquire. And then once you're able to redeem that bond after the vesting period, then you're free to stake it or take advantage of other Fox opportunities, hold it, or market sell it as well. But it's an effective way to align the interests of ShapeShift with that of the community and ensure that the community is able to get Fox at a discount and support the protocol's long-term growth. Tex, anything to add there?
No, I think that was a great summary of it, and especially about ShapeShift really using bonds to their fullest extent for treasury diversification. I think a lot of people were slow to recognize kind of macro events shifting, and yeah, just really hats off to ShapeShift DAO for basically front running, kind of the overall market downturn and acquiring a lot of assets to sustain DAO operations during, kind of crypto winter now that it's here.
Yeah, thanks, Tex. One thing we're really keen to avoid is repeating the mistakes of the ICO bubble when a lot of projects, some with real long-term viability, some were just flashes in the pan. But regardless, the vast majority of projects that were funded back then made the mistake of not diversifying out of their native token. Of course, back then there were fewer options, so we wanted to really prepare ourselves for what we thought could be a bear market. On top of that, in terms of diversification, one really nice thing about these bonds that recently went active for the DAO on bond protocol is the fact that now we're getting exposure to LUSD. So, the majority of our stable treasury is denominated in USDC, which we feel like has the best risk profile overall of the various stable coins. But the problem potentially could arise if Circle started blacklisting DAO addresses. We don't think that's likely, but LUSD is like a really nice decentralized alternative. And this has given us a very frictionless and effective way of getting exposure to that asset instead.
Yeah, I'm definitely a huge fan of LUSD. Kind of like lesser known point here, but with Olympus DAO, I actually submitted the proposal back in, I think it was August of last year, to add LUSD as the second stablecoin that we were bonding into the Olympus treasury after DAI. So yeah, huge support. And I know the Liquidity team is really a top-notch team. And I know you guys also work with B protocol. Is that right?
Not yet, but I think we are interested in basically taking this LUSD that we're earning and generating some yield very passively. And the yield on LUSD right now is like over 5%. So definitely something we should consider now that we're starting to stack some LUSD.
Yeah.
And I think a good point for how Bond Protocol can potentially help us do that very effortlessly. If you want to touch on that, Tex.
Yeah, definitely. I think so. One of the points that Joey touched on with liquidity, protocol-owned liquidity, and bonding mechanisms is the way that Olympus approached this initially was bonding LP tokens directly. And, there are some benefits to that. It's, easy for the protocol itself. It doesn't actually have to bond a counter asset like, USDC, ETH, LUSD, any asset that you want to provide liquidity against, and then manually pair it with Fox in this instance. But what's really cool about the architecture that we built with Bond Protocol is there's a function called a callback function. And essentially what it allows you to do is pass in some arbitrary contract. And so there are a couple examples we could give here. One, if you're bonding LUSD, for example, now this LUSD is going to go straight to the ShapeShift DAO Treasury. And what you could choose to do is you could choose to pass in a callback contract that would automatically, take that LUSD, transfer it to the ShapeShift DAO Treasury, and then automatically trigger a deposit into the stability pool. And this has a lot of features, a lot of benefits, including automating some of these actions where I know a lot of manual actions that the DAO needs to take in general aren't, the most user-friendly for, contributors, but automating this away and abstracting it from essentially manual control to automating it is a really big feature. The other one is being able to take some counter asset and automatically LP it against the DAO's native governance token.
It's super cool and something that was not available in Olympus Pro. So it's a really nice new feature for this Bond protocol. And it's really huge. Like right now we do have the multi-sig, but even for the multi-sig, it's a lot of effort to go execute these transactions. And even if we're doing it every day, basically, then first of all, that's a lot of effort. It adds risk and it just adds time and complexity to when these assets that we're acquiring can start generating yield. But eventually we want to move past this multi-sig to further our decentralization. So the fact that it can just happen automatically, and I'm assuming even the gas is paid by the bond purchaser, right? That's pretty awesome. Yeah, so really cool feature, and I think definitely something that we'll have to look into now that we're running on Bond Protocol and acquiring LUSD. It'd be really cool if we could just automatically have all that LUSD that we're acquiring start generating yield. Especially because our plan right now is basically to spin from our USDC stack and just stack up LUSD until we're more diversified at least, and potentially even migrating away from USDC entirely over to LUSD for the reasons that Kent mentioned.
Yeah, and I think one of the items on our roadmap, and just as a quick plug here, we announced it yesterday that we closed our seed round for Bond Protocol. And with this kind of new injection of funds that we have now, we're going to continue executing on our roadmap, one of which includes some template callback contracts. And one of the ones that would be really helpful in this instance is like automatically depositing LUSD to the stability pool or, interfacing with B protocol. So really looking forward to getting more feedback from Willie and the TMDC here about, preferences for this. And I think we can whip up a callback contract pretty easily.
Awesome. We can definitely add that to the agenda for our TMDC sync next week. I think it's something that we'll be very, very interested in. And that's awesome that you guys are already considering building it for us. Just want to say, you guys were giving us a shout out for the team DC having the foresight to start diversifying the Treasury. But I also just want to give you guys a huge shout out because without Olympus Pro and those bond programs, we would be in a much different financial situation as a DAO. We would have a much shorter runway. So I'm so grateful that together, many months ago, I think almost a year ago, we basically came together and started this program. We acquired quite a bit of stablecoins, which have given us pretty substantial runway in this crypto winter to keep building. And plus, we did still acquire quite a bit of liquidity. So the DAO still owns $1.2 million of its ETH Fox liquidity, which is about 20% of the liquidity in the pool. So, and that's entirely thanks to Olympus Pro. So yeah, really grateful for that, and excited now to dive into kind of bond protocol and all the new features. I'm just remembering as we're speaking, I remember we had Foxonomics No Life, one of our community members who's not in the audience right now, but is pretty active, who was using the bonds a lot. It's one of the main ways that he acquired a substantial Fox position. And I remember he had some really great feedback on the bonds. And it was so funny because Tex was in there responding, and we had already talked about bond protocol. They were kind of still in stealth mode and hadn't announced a lot of the features and roadmap. But it was so cool because a lot of the things that Foxonomics No Life was listing as feedback were the exact kind of improvements that you guys were making in bond protocol.
So yeah, I do remember that. And also, I just looked this up for reference, but it was actually October 15th of last year. So seriously, like a year ago next week, when we first launched ShapeShift Bond on Olympus Pro.
Wow, it feels like it's been a decade.
That's definitely a decade in normie time. That's crazy.
Yeah.
Yeah, it's pretty impressive. And so I'm actually like going back to some of these points as well. And definitely, I think a lot of the feedback here was critical feedback of the bond setup that we have, but it was constructive criticism. And I think a lot of, for example, what people see with bonds is kind of this tendency of like purchasing a bond and then essentially like recycling bond positions, which allows you to really grow a large share of Fox, for example. And one of the interesting pieces on our roadmap, we haven't announced this publicly, but maybe a bit of alpha here that I know we've talked about with the TMDC is essentially integrating different types of tokenization. And so one of the interesting fundraising tokens that ShapeShift has used previously is called a success token. This is a product by UMA, where I think they're now really working on their optimistic oracle. But UMA came out with this product, I think in late 2020, if I'm remembering correctly. And it essentially pairs vested governance tokens, very similar to Olympus style bonds, but it pairs it with an embedded call option for free. And so instead of selling tokens at a discount, you're actually selling it at face value because you're providing additional upside for the purchaser of this token. And I think this is a really interesting mechanism that we can explore with bond protocol to basically shift the incentives of the bond program itself from buying at a discount where, all held equal, if, token price is exactly the same after the vesting period, when you acquire it at a discount, there's still an incentive to actually capture that discount and capture a profit from it. With success tokens, which we're looking at integrating with bond protocol, the idea is that there's additional upside in the future if, certain performance metrics are met for KPI options, or for success tokens, there's also a price metric And so you're actually providing additional upside instead of the incentive being capturing that discount. And this can be a really interesting mechanism to actually shift how bonds are used to basically have more upside for the purchasers of these tokens and prevent this recycling mechanism of issuing tokens at a discount.
That would directly address some of the, like maybe one of the prime criticism of our current bond program, where is it sustainable and is it good tokenomics policy to be issuing all these tokens at a discount? We've seen it generally in the TMDC as being an acceptable trade-off for at least for diversifying. But you guys are positing a way that's sort of like the best of both worlds. It sounds like this is still in development. Do you have like a rough timeline for when this could get implemented into Bond Protocol? I know you guys just actually launched with the fundamental platform, but would be very excited in exploring this further.
Yeah, I'm a little bit hesitant on giving concrete timelines, but I know that by end of month we should be able to have have a rough launch schedule for this planned out. So I know that's kind of a date for a date, but yeah, it's unlikely I would say to be in the next 8 weeks, but it is a big priority of ours.
Very cool.
Yeah, really excited about that. Thanks for sharing some alpha. If you got any more alpha you want to share, please feel free to drop it on us. I wanted to ask you guys to explain a little bit about one of the toggles that is available right now, because basically we've got this first market set up with Bond Protocol, and we'll have to decide in about a week if we want to kind of continue with those same parameters or if we want to make any tweaks for the next market that we launch on Bond Protocol. The first market we launched was just kind of a 2-week experiment to feel out the new protocol and then revisit to see if we wanted to just continue with the same parameters or tweak anything. And one of the really cool new features is, you guys are familiar with our current bonds. Right now, when you buy a bond on both Olympus Pro or Bond Protocol for Fox, it vests over 14 days. So you're able to buy Fox at a discount, but you don't get it immediately. It vests over 14 days. And there is now the option on Bond Protocol to also launch bonds with instead of a fixed term, with a fixed expiry, which basically means we could pick a date in the future. Let's just say October 7th, 2023, and then sell locked Fox that would basically unlock on that date, regardless of if someone bought it today or tomorrow. Basically, as long as that market exists, we could sell Fox that unlocks at a specific date as opposed to a specific term. And that's something I think we should consider. And it could also potentially help with this primary concern that Kent mentioned of mercenary bond purchasers basically recycling the bonds and not actually working to necessarily hold Fox for the long term, but basically maximize their personal gains with those discounts. So yeah, can you explain a little bit about that? And I'm curious, Tex, if you think it's something that the TMDC should consider for one of these next markets we launch, or I guess what some of the trade-offs are between the fixed term and fixed expiry that we should be aware of.
Yeah, so I think a lot of people are familiar with fixed term bonds, given that's the style of bond that Olympus initially pioneered, where it's essentially like a fixed number of days from the time that you purchase it. And this is really conducive for these like more short-term oriented bonds, like the 14-day, 28-day style setup that we've been pushing for a lot with Olympus Pro and Bond Protocol. But the fixed expiry bonds are really cool because it actually allows you to issue these vested governance tokens on longer time horizons. Specifically, when it's 14 days, you do kind of want to trigger that from the point of sale. But for example, if you're issuing a December 31st bond or, March 31st, essentially running structured quarterly bond programs, this would allow you to both gauge, interest in longer term bond sales, as well as basically how the market is pricing future, essentially the token in the future, which is kind of cool. With Olympus, it has this, mechanism of roughly corresponding to a yield curve is one of the ideas with fixed expiry bonds. But for other protocols as well, like ShapeShift, you could imagine running, especially these success tokens where you're providing additional upside. You could actually have these unlocks at different points in the future. And I know this is a bit of a rabbit hole on how the bonds themselves are tokenized. The fixed term ones are tokenized as ERC 1155s, and that's what you'll see currently. If you go to purchase a ShapeShift LUSD bond, with the fixed expiry bonds, they're actually tokenized as ERC 20s. And this has a lot of cool, interesting properties where they're more composable across DeFi more broadly, where you can imagine, secondary markets trading for these vested governance tokens popping up, as well as using them for lending purposes. Those are just two amongst, I'm sure, like a myriad of examples that will eventually crop up around this style of token.
Yeah, that's a super huge upgrade, and just makes the fungibility of these fixed expiry positions, creates a lot of opportunity, a lot of possibilities, and composability. And so I'm pretty excited. I think I would be in favor of the TMDC at least kind of exploring, like you said, testing out some of these markets with fixed expiry and seeing, what is the market price for Fox in the future. Also, we don't have to worry about the recycling issue with these if we pick a date far enough in the future. I think it really does a great job of mitigating that concern. And yeah, one of the things that I think could make a lot of sense if we do decide to sell a decent number of these fixed expiry bonds would be for the DAO to basically mint some themselves and provide liquidity on an AMM so that these positions could be liquid. Even though they're locked, they could be liquid, and the DAO could generate trading fees if people are swapping on that liquidity, basically putting our idle Fox.
Yeah, and interestingly, and that's exactly one of the use cases that I think will be pretty awesome for it, where, with vested governance tokens, the ideal liquidity solution for it is you would actually pair vested Fox against, spot unlocked Fox. And so there's actually this opportunity for people to, trade out of the vested positions, but it increasingly has this, there is like an impact on the exchange ratio and some cost of illiquidity. But because it's actually just denominated in the native governance token itself, it's generating essentially just additional governance tokens for the protocol that's using this mechanism to basically have this interesting effect on circulating supply of a token. The way I like to think about it is almost like this liquidity pool with unlocked and vested tokens would kind of act like a capacitor of sorts, going with a, kind of like an electrical analogy, where it actually, in times where maybe people are trading out of this position and it depegs from the unlocked token, people who have unlocked tokens and want to bid up the vested token in the future will actually like draw out some additional tokens from circulating. And similarly, when there are conditions where maybe in Olympus's case, I think a lot of people are familiar with how the price kind of got it ran up too high. It can have this dampening effect where it actually impacts volatility on the low side and on the high side. So I think there's a lot of interesting use cases to explore with this particular type of liquidity pool, and would be really, really fascinated to see it being more widely in use in DeFi.
Super exciting. And again, just one of those really big upgrades and evolutions that Bond Protocol is bringing to the table over the V1 Olympus Pro, which itself was a huge innovation. But super cool just to see kind of what you guys have learned over the first year about running these bonds, and I guess even longer if you include Olympus's own bonds, which are super successful. And really cool to see how you guys have taken a lot of those learnings and feedback and are using that to evolve the protocol and make it much more composable and flexible. Super cool. And I remember like when the Team 2C was first learning about Bond Protocol, we were just really impressed with the roadmap and the features that you guys are prioritizing and the possibilities. So yeah, I would definitely be interested in us exploring that. And it's cool to see too. I'm excited to see some other projects using the bonds too. I know that's one thing that helped us with Olympus Pro as well. We were kind of able to see how Alchemix and how other protocols were using Olympus Pro and what was working well for them. And ultimately led to us moving away from focusing on acquiring our liquidity pool positions and focusing more on acquiring stables for Treasury diversification. Are there any? Okay, so let's see. Neverwise has a question. Not able to come up on the call, but Nevertheless, I know we are very interested, I think, for yieldies using B protocol for the LUSD as a source of yield. I think it's something that we're definitely interested in. It's just this next version of the yieldy contracts is built on top of tokamak. So it would require some significant, I think, changes to the contract, or at least building that strategy out and getting it audited. So I wouldn't necessarily, if it felt like it was shut down, I wouldn't say it was shut down, but maybe just not immediately a priority. But separately, I think related to this is we can talk about ShapeShift providing an interface to Bond Protocol. So Bond Protocol, of course, has their own interface, but ShapeShift, our goal is to support all the wallets, all the chains, and all the protocols. And Bond Protocol is we see it as being the top protocol for bonds, and I think I see it as being the protocol for bonds, considering all the experience that the team and the community has. So yeah, Tex, can you talk about how it would be possible for ShapeShift basically to be an interface to Bond Protocol?
Yeah, definitely. I know Joe has talked a lot about this recently with, kind of on the outbound trail. So kind of want to pass it over to Joe here on the front end stuff.
Yeah, definitely. So is the crux of the question just why wouldn't we build this?
I think, so there was kind of two pieces. Let's see. Yes. So definitely, I think Neverwise might have been talking about, and Neverwise, please correct me if I'm wrong, for this new product that ShapeShift is building, yieldy tokens, leveraging B protocol as a source of yield rather than just tokamak, which is currently what the next version of yieldies is built on top of. But I think it's definitely related to another hot topic that I think would be great to discuss, of ShapeShift being an interface and integrating Bond protocol into our own app for our own users.
Yeah, absolutely. I mean, because we have a permissionless architecture, like it will be possible for our partners to implement Bond protocol as part of their holistic DeFi architecture. We do provide a front-end interface that makes it a lot easier, our DApp, in order to purchase bonds, as well as browse all of the existing bonds as part of Bond protocol. But yeah, we're really excited to explore deeper integration possibilities with ShapeShift DAO.
Super cool. I'm really excited about that as well. And I think as a first step, something that we're talking about with the Bond protocol and the team and the product team has already given the thumbs up on, as a first step, is at least putting a call to action on the Fox page that we have in the app, saying buy Fox at a discount. So we can really, again, hopefully mitigate some of the recycling concerns that many of us in the community have, and make sure that we're encouraging as many actual long-term Fox holders, community members, users to purchase these bonds. And it's great for any community member or user that wants to purchase Fox and doesn't have any intentions of liquidating their position over the next 14 days, for example. This can be a great way just to basically buy Fox at a discount. So excited to get that CTA in there, and then also very excited for possibility of integrating Bond protocol directly into our DeFi Earn tab, and exposing not only the Fox bonds, but all of the other bonds that will be available on Bond protocol.
Yeah, and it's really cool because interestingly, with the LUSD bonds, we took a lot of design cues from Liquidity and how we are thinking about bond protocol and the incentives. So one of the key mechanisms that Liquidity identified for their immutable protocol for LUSD is that one of the key participants in order to mint LUSD is having a robust network of front ends. And so if we look at Liquidity, for example, and I know this is about bond protocol, but I am a huge fan of the Liquidity team. And so if you'll allow me to shill them for a bit, they have like many different front end operators from dedicated front ends just specifically for Liquidity to actually being integrated in InstaDApp, DeFi Saver, amongst others. And this is one of the things that we identified for Bond Protocol as well, where if you think about what the Bond Protocol and Olympus Pro contracts are doing, they're essentially creating this dynamic pricing auction. And auctions are only as successful as how many people participate in an auction. So one of the key participants in the protocol are people who are providing access to the contracts or running a front end for bonds. And so at the contract level, we actually built in a decentralized front end fee where anyone who runs a front end to provide access to the bond contracts themselves can capture a fee. And if you take it to the extreme where it's just charging a super high fee, no one would purchase from that front end because the pricing would be better on lower fee front ends. But it's actually a benefit for everyone in the ecosystem for multiple front ends, even with fees being implemented, because when someone purchases from any given front end, they're actually preventing the discount from going lower. And this provides a benefit to protocols. It provides a benefit to the user who purchases that bond. And so we're really trying to incentivize as many people to run websites that provide access to our bond contracts. And so one of the key partners that, in addition to launching bonds with ShapeShift, we've been talking about actually integrating a front end for bond protocol with ShapeShift's interface. And I think this will be really huge, for people who use ShapeShift Wallet and KeepKey. And I know we kind of touched on that a bit with the Wallet Connect integration, Willie. I don't know if that's something you want to touch on here.
Yeah, the Wallet Connect integration is very exciting. Always happy to talk about this because it's one of the features I'm most excited about, and it's almost ready to go. But finally, ShapeShift users will be able to, both ShapeShift native wallet users and KeepKey users will be able to go connect to any dApp that supports Wallet Connect, which is pretty much every dApp, including Bond Protocol. So yeah, very excited about that. And also, yeah, excited about us just integrating directly into our interface, Bond Protocol, because and giving our users exposures to it directly. It'll be an interesting question for the community to decide if we want to put any fees on top of it, because historically we've avoided adding any fees on top of any decentralized protocols or services, even centralized services that we integrate. But knowing that, I think it's a good question when interfaces like Liquidity and like Bond Protocol, when there is a fee on their interface itself, potentially matching that fee, I think is something that the community could consider doing. So yeah, can you just make it clear for us the fees that Bond Protocol does charge on their interface and what the options are for integrators to add fees?
So essentially the fees themselves, so there are two configurations at the contract level: a protocol level fee, which right now it's 0% fees for the protocol, and then the front end fee. Currently, Bond Protocol, while we're in beta, we're actually not charging any fees as well. So it's completely feeless at the moment. which is a huge upgrade from the fee that we were charging with Olympus Pro, since it was, a new product. Nobody was really doing anything like Olympus Pro, was quite high, around 3%. And then we started talking with our partners and realized that actually getting more people using this mechanism is more important for the long-term health of the network than short-term capturing high fees.
Total. That's awesome. The price is right. Love fee list. Really appreciate that. And I think I'm not entirely following, but your last comment was that we could create a tranche trove and allow people to sell Fox for LUSD and invest and earn from that. But I think right now what Bond Protocol has built is very extensive, and I think it would require a lot of effort and time from us to build a similar offering. And right now the fees are 0, which is pretty freaking awesome. And Bond Protocol also has a large community of people who are checking out these bonds and really purchasing our bonds, which is huge. So I think if anything, I think there's opportunity for us to work with Bond Protocol. Again, maybe integrate them as a protocol into our interface. And then we would not have to put any fees on top of it if we did that. But as we all know, we've got so much on our own roadmap that we've been focused on, that it's really nice to be able to have these awesome contracts built by the team with the most experience in bonds available to us.
Well said, Willie. Speaking of fees and costs, Tex, I have a question. I don't recall coming up during our prior chats or during the TMDC. But one of the great things about Bond Protocol, you guys can check this out with your own eyes by going to Etherscan, looking at the DAO Treasury. And I think we alluded to this earlier, but instead of having to sweep funds from a contract and make these manual deposits, everything is pre-approved, and it's fabulously frictionless. These deposits happen automatically, pretty much as the bond sales occur. So if you look at the DAO Treasury and filter it by token transfers, you'll see that happening on an ongoing basis, which is great. It's really, I think, a nice iteration. My question pertains to this sort of paradigm in a high gas price environment. So my own thesis on gas prices is, of course, we're in a shitty bear market right now. Everything sucks, but things will inevitably bounce back. And as layer 2s become the primary user of the mainnet, I think, and more data is posted on chain, and things will get pretty busy on that front. So it's likely that gas prices will go up. So you can imagine a scenario when there's, I don't know necessarily about a bond sale like the size of which we have right now, but something that's being very heavily used, bought, or the bonds being bought a lot by participants, and gas prices are high. There could be a situation where that gets to the point where it's actually eating away at the costs are eating away at the DAO or whoever's doing the bond. Is there any way around that? Like, is there perhaps a way to batch those transfers so they would happen every, say, 100,000 LUSD, or perhaps maybe you guys are already thinking about scalability on other layers?
So the sending of those tokens happens. So for example, I think batching the transfers, you could actually batch them from, like I mentioned with a callback contract. If you wanted to deposit them in B protocol, you could just have a keeper, which actually monitors some deposit threshold. But sending the tokens themselves, I think that does actually need to occur at point of sale when a bond is purchased. This is actually, let me pull up the numbers here. I was just chatting about this with someone yesterday, but we actually have, the amount of gas that Bond Protocol uses versus Uniswap versus Olympus Pro, and it's actually quite good. So just benchmarking here, a swap on Uniswap costs around 120K gas, and right now bonds are coming in at 190K gas. And so this is pretty efficient. It's a little bit more expensive than a Uniswap transaction, but compared to the Olympus Pro gas, that was actually using 312K. So we got that down from essentially we cut it down by a third, which is
Interesting. Is
pretty
that
nice.
is that cost inclusive of the actual ERC20 transaction?
The ERC20. Oh, you mean when it's redeemed?
When it's sent to like the treasury, when the tokens are
Yeah,
sent.
it's inclusive of that send. So it actually, for example, what happens is at the contract level, when a user purchases a bond, what they're actually doing is, and let's say we're talking about ShapeShift bonds, the user actually sends LUSD at that moment, and it's transferred directly to the ShapeShift Treasury. And then from the ShapeShift Treasury, Fox is sent to, in this case, the ERC 1155 contract to be redeemed at maturity of the bond. And then it also updates the pricing of the bond auction itself. So all of these things happen within the bounds of just a bit over a Uniswap transaction.
Cool. Thanks for more detail on that.
Yeah, definitely.
All right, we're getting up towards the end. I think we're actually a little bit over time, but typically we hold these for an hour. So if you guys don't have to run, would love to give space for any community members to ask any final questions while we've got Tex and Joe here. And while we wait for that, Tex and Joe, if there's anything else that you're really excited about on the coming up on Bond Protocol's roadmap, would love to hear about that. But before we dive into those final exciting thoughts, I see we've got Josh up on stage. What's up, Josh? You got a question?
Hey guys, yeah, thanks Tex and Big Fish Joe for being here. My question is, we were having this debate yesterday with one of the community members about like I'm going to use some air quotes here, the actual cost of the bonds. So like, for example, the argument was being made that let's say that the average bond through the new bond protocol is being sold at a 10% discount, right? And so, and what we saw before, particularly the Olympus Pro, is that if someone they bought a bond for 100 Fox and they paid 10% off the price of that, and then they had 100 Fox in their wallet, and they immediately sold that. And then when they get the 100 Fox back in 14 days, and they've essentially made a 10% profit. They've essentially arbitraged the bond. If someone were to repeatedly do that, like multiple times, do you have any idea of like if there's any compounding effect of that discount and it actually costing the DAO more than a 10% discount on the Fox in some way? It's probably a little confusing too, but that was the argument that was being made, right? Is that the cost of running these bond programs is more than just the discount that someone's getting the Fox for through the bonds. Does that make sense?
Yeah, I think I see what you mean here. I would say that there is one factor that's not being taken into account, and that actually the max payout is a variable. So you can't purchase infinity. It's like if you go to a casino and basically try and game a roulette table for like black red and just start with like $1, then 2, then 4, 6, 8. Like before you know it, after like 50 bets, you're betting, your mortgage. And so I think like with the compounding effect, it is possible for that person to actually increase their share of Fox tokens within the bounds of having a max payout. So it can't be infinitely compounded. And I think otherwise, looking at it, I think there is an effect where that user is able to compound it, but I don't think it actually costs more than what you're seeing. And I think the way to assess this would be to essentially look at the total amount of bonds purchased versus total amount sold, and that is the net cost of running a bond program.
Yeah, the you're saying the amount of look at the total amount of Fox purchased through the bonds, and then the total amount sold by those same people who purchased the bonds. Is that what you mean?
Sorry, what I mean is the net cost of running a bond program is just looking at inflows versus outflows. So comparing like the price of Fox when it was actually sold as a bond versus the amount of for Olympus Pro USDC or for Bond Protocol now LUSD. And
Right.
the gap between those is essentially what it costs to run the bond program.
That makes
Yeah,
sense. Kind of like the analysis Darwin posted earlier for how we've done so far with bond protocol. It's basically just the average price that the DAO is selling Fox for.
Right.
Right. That makes sense.
Yep. Okay. Appreciate that. Thank you.
Yeah, and just to add on, like we've had successful bond programs with y'all on Olympus Pro, but community engagement is key. So we're working with you to make sure that there's more compatibility so that like Fox users can come in and use your native wallet, but also making sure that we have as many roads as possible to point Fox community members to the bond program. We did have bond bots for Olympus Pro, and that's something we definitely want to start up for Bond Protocol as well, so that the community can monitor the discounts and identify the best time to jump in. The more active community members are in bond programs, the lower the discount is, less valuable it is for those folks that are, quote, arbing it and just trying to generally use it to their advantage. But yeah, I mean, it's I think y'all are doing a great job of making sure that you're promoting Bond Protocol, onboarding it, spreading visibility and awareness. And yeah, I mean, if there are lingering questions or if there's anything that we can answer as far as like the effectiveness improvement in the program, we can continue that conversation either one-on-one with community members or with y'all directly, of course.
Really appreciate that, Joe and Tex. Appreciate all the involvement with the community thus far, and appreciate that offer. I think we'll make sure if we ever see anyone asking questions, or if any of you guys ever have questions, we got Tex and Joe right here on our Discord. Feel free to ping them. Feel free to jump into the Bond Protocol Discord, which is also very active to ask any questions. This is because I think this is definitely one of our strongest partnerships that to date has resulted in some of the largest benefits for the DAO. Again, so grateful that we were using Olympus Pro before to diversify our treasury, and so grateful that you guys have now launched Bond Protocol with all these cool evolutions, and that ShapeShift got to be the flagship launch partner. That's super cool. So
yeah, definitely. And one thing I wanted to bring up too, and I think we brought this up a long time ago, but we do want ShapeShift to be like a key member of our, we haven't named it yet, but just kind of customer advisory board. So if there are any improvements that DAO members, contributors, or you specifically want to see, be vocal, surface that to us. Like we do want y'all to help shape the direction and the vision of Bond Protocol and what we become.
Appreciate that.
Yeah, and to add on to that, maybe one other piece of alpha. This is kind of public-ish, but for example, Olympus DAO is testing out an integration with those ERC20 fixed expiry bonds that I mentioned, running them through Gnosis auction. And I recall this this piece of feedback also coming from some conversations here in the ShapeShift server about how are more users able to participate in one of these auctions. With a Gnosis auction, essentially, people will be able to submit passive bids and not need to essentially be there at the exact moment their preferred discount arises. And I think this will be like a really good use case as well, an improvement on and an experiment for sure to run together with community members of ShapeShift, I think would be really cool.
Love that idea. Yeah. Definitely let us know what we would need to do on the team DC to explore that. I think all these improvements give us a lot of potential for us to improve some of the main concerns and critical feedback we had with Olympus Pro. And I totally agree with you, Tex and Joe, that ideally we can really make sure that it's our long-term hodlers and community members that are able to get access to these discounts. Or other entities in the space that just want to be long Fox for the long term, as opposed to recycling. So lots for us to explore going forward, especially as you guys add all these really cool new features that you have planned on the roadmap.
Yeah.
Are there any final thoughts that you guys want to share with us? I know we've covered quite a bit today. So if that's all, if we've already gone above and beyond with Alpha, no pressure. But any final thoughts you want to share with the community?
I think final thoughts from my side are, similar to mentioning auctions are only as successful as the number of participants. With bond protocol auctions, it is critical to have committed members from the community actually purchasing bonds and maintaining that discount. It's beneficial for community members, beneficial for the protocol itself, and really just looking forward to having more engagement from the ShapeShift community and provide some of this feedback. It's some of the best feedback that we've received from our Olympus Pro days that helped us, helped inform the product design decisions and our roadmap moving into the future. So we really welcome this feedback. Honestly, constructive criticism is beneficial and highly welcomed for us, given that we're really trying to find product market fit and work together with some of the leaders in this space, like ShapeShift DAO.
You guys are the best. Thanks so much for being open to the feedback, Tex.
Yeah, absolutely. Anything to add to that, Joey?
No, I think we've talked quite extensively about Bond Protocol and our partnership.
Really appreciate you guys taking the time, and thank you, Foxes, for joining and for bringing some great questions.
Thank
Happy
you,
Friday,
Joe.
everybody.
Thank you, Tex. Looking forward to a lot more awesome collaboration in the near future. And congrats on your launch. We're really honored to be a launch partner.
Yeah, thanks
Thanks,
so much,
y'all.
guys.
Adios.
Cheers, everybody. GM.
Bye, everyone.